What's up, guys? It's your boy T-Shroom here in for the Investing Bros. Extremely excited that you would be tuning in this morning at the bright early hour of 9 a.m. Eastern Standard Time. I'm here for you. We're going to be diving into the world of crypto and answering the question, should you buy the dip? A lot of people are wondering this very question as we've seen a big retrace from both Ethereum and Bitcoin. We're going to get to the charts, we're going to get to the news, and we're going to cover it all for you guys. We've got some pretty big news from the SEC looking like they're setting their crosshairs on Terraform Labs now. We're going to get into some of those details, and we're going to also look at some other altcoins. So shout out what altcoins you'd like for me to do some quick traditional TA on, and I will absolutely make that happen for you. We're going to try to go the whole hour today, guys, but if things start to drop off, meaning prices or views, then we will go ahead and call this one short today, as I am by myself today. We will not be shooting over to Tim, but you should be used to that this week. Also don't have a guest today, so that's okay. It's going to be a T-Shroom takeover. Where's Tim? Tim is in a very important business meeting, and it's just all the more reason that you should like and subscribe to support the channel so that we can get on our own feet and be able to move forward. And let's continue to move forward today with the show. So today I want to go ahead and start off with looking at the bubbles. Let's just do a quick little analysis, and then we'll go over to the chat. So far, we're seeing Filecoin really take the lead this morning, up 25% on the top 100. Magic is up 11%. Pretty much all names that nobody really talks about too much in crypto YouTube, at least on some of the bigger channels. Floki's still staying alive here. Floki was up quite a bit, up almost 70%. I believe it was on Wednesday. And then you've got Matic staying alive here, and eGold staying pretty gold, you might say. Let's see what the price of eGold is. You don't check on that one too much. 48. Okay, I've got some eGold from a long time ago, and not very satisfied with that investment, but. Let's go ahead and engage with the chat here, guys. Let's see who was the very, very first. I'm seeing HBAR. We can definitely take a look at HBAR. EOS. Not sure about EOS. I mean, I'll write it down. Let me just make sure here I'm writing everything down on my handy-dandy whiteboard here. So we got EOS and HBAR. It's EOS, HBAR. And just let me know. Oh, graph. All right, we'll take a look at those. Okay, so those will be the ones so far that we'll take a look at. That's going to be EOS, HBAR, and Graph. So before we get any further, let's go ahead and take a look here at the chat, see who was the very first. And it's Yair Navarro. Said, good morning, Yair Navarro. And he said, finally hit 25K again. Yes, we're going to look into that because although we did hit it on the 4-hour charts, we did not get a candle body close above 25K. We're going to talk about that a little bit for Bitcoin. CBD Suddy not getting there too late. He was second. He said, yo. I'm also seeing Henry C. Hernandez. I'm seeing Ninja Glock. He said, what up, bros? Elo Brown, Win Peoples. And I'm seeing Mr. B, Justin Eubanks, Crypto Trades. Crypto Trades and I had a lot of fun this morning in the behind the scenes as I was preparing for this show. Crypto Trades got to hear some stories from yesterday of some kind of crazy turbulence in my own life. Nothing too bad, just some technical stuff. Let's see. But thank you for tuning into the behind the scenes Crypto Trades. Always fun to have you in there. Crypto Mini Bike and Grand Roofing Incorporated. What is going on? And then Zegger, and a bunch of other names here, guys. If I did not, Army Piper, let's see, Joe Watkins, Reboot, Mr. B. If I did not read your name, guys, don't feel bad. Cilantro Island, I like that name. That's making me really kind of zero in on what I might have for lunch. The classic IT guy. We got everybody you could ever imagine and more in the chat today. So definitely be keeping me honest. Make sure that I'm keeping up with keeping the likes up, asking folks to like and subscribe. Crypto Trade said, T-Shroom, I just want to say you are very handsome and you speak very good English. Wow, I really appreciate that. crypto trades. Thank you so much. That's a good little boost to my self-esteem and my confidence this morning in the early morning hours. Always good to have some support in that direction. Well, guys, we're going to be answering the question, should you buy the dip? And right off the bat, what I want to do is go ahead and check out the charts, because you would never want to buy unless you have done a little bit of due diligence and checked out what it is that you are investing in and its movement relative to the rest of the assets. Now, we aren't at market open yet. At 9:30 Eastern Standard Time, I will be zooming on over to this watch list here, of which there are many, many different assets that folks are buying and selling throughout the day. But most of them are traded on the New York Stock Exchange, which is not open yet. So what we're going to do is we're going to take a look at crypto, because it's always open, 24/7, baby. So let's take a look here at Bitcoin. Starting off, what I want to show you guys is its relationship to the Bollinger Bands here. Some people pronounce it Bollinger. It's kind of a GIF and GIF scenario there. How do you pronounce it? Bollinger or Bollinger? There probably is a correct way, and one of those is just wrong. But let's take a look at those Bollinger Bands. So right now, as you can see, Bitcoin had a big wick through those Bollinger Bands yesterday, right? And what does that tell us? That means that we wanted to test higher. This asset, in this case, Bitcoin, wanted to test higher, wanted to see just how high it could climb in this new environment. And what do I mean by new environment? Well, we are in a new environment with the Fed. The Fed on the 14th of February really had a new piece of data, which was the CPI, right? The CPI came out, and it wasn't exactly what everybody dreamed of, but in a lot of ways, it showed to the market that there is an all clear. And so that is what you're seeing here with the Bollinger Bands, right? You're seeing a wick of an asset that is saying, how high can I go now? It's kind of like a kid in a playground saying, this new substitute teacher, right? Or new teacher. Let's not even call it substitute. This new teacher that we have, when we go to recess, this teacher lets us go this much further out into the field, right? Whereas our old teacher would call us back, hey, you need to come back. You don't know what's over there on the other side of that field. You need to come back. The new teacher just lets us keep going. She doesn't care. She's interested. So we're gonna test and we're gonna see. And the kids in that playground, they got pretty far, right? They got to 25, almost 200 on that wick. But even then, they got scared and came back, right? So that's kind of the way that you can think about it here. And we're going to answer the question, should you buy the dip, based on everything that we're going to look at? Well, that's the Bollinger Bands, but there's a lot more to take a look at here. The next thing I want to take a look at is the simple moving average, which is below us. And more than likely, since we've sliced through this 200-day moving average and we've not come back and tapped it, there is a decent amount of precedent that you would expect an asset to come back and test that 200-day moving average. Now, that would put us back, if we came and tested it today, which would be quite a sell-off. That would be a sell-off to the tune of 16%, which I do not expect really to happen in the current environment. And I'll get to those reasons why here later in the show with the news and just with continued chart analysis. But the reason why is because you want to reestablish security. You want to reestablish support before you start making moves up to 30, or a lot of folks are saying 28. And so that's really kind of the story of where Bitcoin is in relation to the simple moving average. Is more than likely it's going to want to come back and test, and it's going to come back and test around 19,700, so 19,700. Now, it's probably not going to do that overnight, and there's also a chance that it doesn't do it at all, right? But when you're looking at the simple moving average, that's what you're thinking. It is kind of like a gravity. It's kind of like a gravity in and of itself, to the upside and the downside. As you can see here, zooming out, Bitcoin traded below its simple moving average here, the 200-day, for a long time. And as you can see, it once it sliced through, right, before it went lower, which it eminently did, it came down to 28. In this period back here in December of 2001. It sliced through, right, came down, but before it went lower, it came back, right, and it traced back all of those losses, had a little bit of a bull market rally here until it came back up and went ahead and tested that 200-day moving average, right? So fundamentally, these are some of the things that you want to pay attention to when you're checking out the charts. It came back and it tested the 200-day moving average. In this case, it was at 48,300. That's a nice price for Bitcoin, isn't it? Once we return to that, there will be a lot of smiles on faces of hodlers that have been hodling. But the lesson here is the 200-day moving average is not to be ignored. And here, as you can see, it traded below. Let's see for how many bars it traded below. Let's go and see this. For 291 days, so call it 300 days, there was Bitcoin price action below that 200-day moving average. And what you can expect is that at some point it's going to break that, right? Unless there's some major fundamental shift, right, that would say, no, this underlying asset's actually done for. Nobody wants to buy this. Something like Enron, right? Enron just never is going to come back, right? It went bankrupt, its assets were distributed, now the stock is gone, you can't really buy it anymore, right? That is not the case for Bitcoin. Even though there was a stark sell-off here for a prolonged period of time, it eventually came back and is now retested and penetrated through, sliced through, you might say, that 200-day moving average to the upside and now has moved up. Now, in the same way that the price action wanted to come back and test up here, more than likely you would expect, because it missed here, in mid-February 12th, it tried to come back and touch the 200-day moving average here, and it didn't. It got bought up. There was too much demand for Bitcoin around 21.5. There was just too much demand for it. Now, we can't say that it won't happen again. When Bitcoin comes back down to 21.5, I know I'm going to probably buy more, right? There's going to be a lot of buy orders down here, a lot of limit orders already. So there's what is a limit order? A limit order is when you can go ahead and say, hey, Coinbase or hey, Binance, I want to go ahead and put in an order to buy at 21.5, right? But the price isn't down there. Well, when it does, then that order will go through. A lot of our veterans already know about limit orders, but for the noobs who are just tuning in, there is a little lesson for you. But a reversion down to the 200-day moving average is not out of the question here, guys. It tried to do it here, and more than likely, there will be some type of move downward. Now, there is a chance that it won't. And I feel like now we can move on to the MACD. So checking out the MACD here, guys, you are seeing nothing but bullishness. So this would be a reason why we would avoid coming back down and testing that 200-day moving average for quite some time. Because as you can see here, and this is on the daily chart, as you can see here, there is a bull cross, right? And this is what you want to see. Back here, when there was a bull cross, let's check out the price action. What happened? There was a movement to the upside. Not a crazy one by any means, but there was a movement to the upside. Let's go back and check that out. So right here on Thursday, the 24th of November, yeah. So that was a signal of general sideways but upward movement. Now it dipped back down before it made that move up to the upside, and it wasn't by very much, but this was in the bowels of the bear market where a lot of uncertainty was thriving. Folks didn't know if we were ever going to come back up. They were losing hope. But then things changed, as you can see reflected here in this close to parabolic move up. So let's go ahead and conclude there that the MACD is showing something pretty similar, is that that's ready for a move to the upside. Now, we may have already seen that. Bitcoin may have jumped the gun here in anticipation of this bull cross, but ultimately there is definitely a lot of bullishness in the market. Also checking out these decelerating red histograms. What does that mean? That means that momentum is moving away from the bears and toward the bulls. And now, as you can see, kind of the histograms are printing towards this midline, this zero line. You can kind of conclude that it's anybody's game. The bulls or the bears could kind of take it from here. So what did you do? Well, you could go ahead and you could take a look at the RSI. The RSI is showing us that there's more momentum to the upside than to the downside, as these lines are remaining up above the 50 mark. Now, we did dip down back here in early February, in the 9th through the 13th, but ultimately these lines have stayed up above that 50 mark, which doesn't necessarily mean that either one has control. But if you had to say one, it would be the bulls, and that is definitely reflected there in the price. So let's go ahead and check out Ethereum, and let's see what Ethereum is rocking with. Let's see, going back over to my crypto you can see, actually, before we leave Bitcoin, I wanted to show you guys one thing, and that is the difference between the 4-hour and the daily candlesticks for Bitcoin. And so what you can see here is on the daily, we did not close above 25. So 25 threshold is right here. And as you can see, we wicked up there, but we did not close a candle body in that. Whereas on the 4-hour, we absolutely did. So as you can see, 25 was well in a closing range here for the candle body that, let's see what hour this was. See, 25, yeah, well within the close here. And that would have been midnight or noon of yesterday. So that's pretty good. Now let's go ahead and check out Ethereum. Just wanted to point out there the difference between the 4-hour guys and the daily candlesticks there for Bitcoin. What does that mean? Does that get us closer to an answer to the question of should you buy the dip? I would say at this point, this is something you want to be cautious with because we didn't actually close above 25 on the daily for Bitcoin. So it's something you want to be cautious with at this point, right? But we're not drawing any conclusions yet. And we're also not sure buy the dip of what, right? I know that's a question I came up with, but don't worry, we will get you a good answer. So Ethereum, let's go ahead and take a look at the daily chart. We might come back down to the 4-hour, but I'm not so sure. Before we do, though, let's go ahead and take a look at this super chat that came from Elo Brown, donating $7 Canadian. He said, "Happy Friday, T-Shroom, and all the bros in the chat. We will or will we not hear an army joke on this T-Shroom takeover? We shall see. I might get into an army joke and or an army story. Let's read on because I'm seeing that there's a decent amount of chat here. Army Piper said, "Take care, T-Shroom. Watch the rest later. Off to my show." So Army Piper's going on and helping other folks look at some charts there too, which is super awesome. Felzik said, "Where it wicks, it will stick." And then Felzik said, "Your name is right there. Where else should it be?" Yes. Okay. And then Steve Shrum said, "Hard to light a short wick." Yeah, it's true. It's very true. And Steve Shrum, if you don't know, is my father. Hello, Dad. Hope you're having a great morning. So let me just answer a couple of these questions here. Or reference some of these things here. So where it wicks, it will stick. Yes. And if you guys don't know what that means or what that is referring to from Felzik, let's take a look. So this is a wick, guys. Here, this is a candlestick, right? There's many different ways to look at price movement. And on TradingView.com, you could see a line graph, right? So you could see the price movement reflected just as a line. And in some cases, that can be beneficial. But what don't you see here? You don't see any wicks. And that's not very helpful in some cases because you want to see those wicks. It gives you richer data. It gives you more data. So I want to absolutely go back to the candlesticks and show you guys, look, this is a wick that you didn't see in that line chart. Again, candles give you more data. As you can see, Ethereum coming in here at 1,666. And let's go ahead and take a look at the Bollinger Bands as we did with Bitcoin. And see what those Bollinger Bands are telling us. Well, Ethereum wicked on the daily chart up above those Bollinger Bands too, right? So testing that playground as well, seeing a new environment, seeing a new teacher. You saw it happen back here too, seeing how much can I get away with now? What can my behavior, how can my behavior change and not be punished and not be noticed even? Well, it didn't get all that far, but it did get out of the Bollinger Band. So it's new movement relative to price movement, relative to the stocks, relative to bonds, relative to liquidity and all the other markets. The Bollinger Bands helps us say, okay, well, what about Ethereum if you're just looking at Ethereum? And then you can see here, yes, it did test outside, and it tested outside to the upside, right? It also tested the downside, though, too. It wanted to see how far, can I get close to the teacher if you want to stick with that analogy. How close can I get to the teacher before it's annoyed? Right? Probably the analogy kind of breaks apart at that point. But looking at the MACD, you can see similar thing here as in Bitcoin. you're getting a nice bull cross here, and you're also getting decelerating red histograms. So that just continues to tell me that there's bullishness in the market as selling is waning. Now, you could see a continued selling here because it's high, right? And this is what is going to be the biggest bearish argument to the question we're asking today. Should you buy the dip? First of all, one thing you could say is that the dip it's not really much of a dip. Let's go ahead and check it out here. It's only Bitcoin from its candle body high yesterday on the daily chart is only down 3.3%. Okay, and Ethereum is barely down, right? So it's retraced all the way down 2%, but then it's closed. It's only down 0.3%. So really not that much lower from, again, the high of yesterday's candle body. It's not the close of the candle body. I may have said that, and I apologize. This is the close of yesterday's candle body. Red candles close lower than the top. Green candle bodies always close to the upside of the candlestick, just so you know. So answering the question, should you buy the dip? Well, first of all, there's not really much of a dip here, right? This is a much more of a dip, but this happened over a period of time. So if you're trying to gain any exposure to crypto and you don't have any investment in crypto at all, the answer to this question is more than likely yes, right? You should buy the dip if you do not have any crypto at all. And that's going to be kind of my conclusion. Whereas if you are someone like me who's been DCAing and who has a lot of crypto, a lot of altcoins, a lot of Bitcoin and Ethereum, you may not even consider this really to be a dip, right? So you may not be buying this at this point in time. I think the major variable here is how much crypto do you have and what is your risk tolerance? Again, if you do not have any crypto at all, then the reason for that may be is because you don't have any room to take any risk. And that's good. That's okay. That's an all right place to be in. What that does is it helps you align your priorities, helps you align your goals. And what you need to do is now make enough money, make more money, maybe asking for a raise, maybe accepting more contracts, increasing your revenue in order to invest and have money that you can afford to lose so that you can buy dips. But let's say you have a little bit of what we like to call dry powder, a little bit of money to invest. Is this the place you want to invest? Again, if you don't have any crypto, then yes, the answer is yes, because at any time, we have a pretty strong technical argument right now for things to blast off. I'm not saying it's going to. I think it's probably a fairly low probability, but there's certainly a higher probability that prices are going to blast off. And when I say blast off, I mean 20, 30% in a day, right? Higher probability here with this MACD lineup than here. And why do I say that? Well, because you have decelerating green histograms here, right? Things are moving generally down. It had shown that there was a peak. And let's go ahead and take a look at that just so you can see what that looks like here. So there was a peak. And at that exact time, there was a movement downward. So if you'd bought there, right, you would have had a worse off opportunity. You would have bought in a worse time than here, than if you'd waited until those green histograms went ahead and ceased decelerating, right? So if you waited and just bought here, right? It's a long time to wait, right? But patience is the name of the game here in investing. But if you waited here and bought Ethereum down at 1,466, right? You would have then immediately seen upside to the tune of 18% all the way up to that wick. And if you'd waited that long and sold Bollinger to Bollinger, lower band to upper band, you would have done pretty well. Now, that's a fairly advanced trade. Why? Because it requires patience. It requires you waiting until you're getting the all clear from the red histograms on the MACD. And it also requires selling at the top, which is almost, as any trader will tell you, close to impossible. It's very, very difficult. Mike Lowry said, T-Shroom, what's up? Much love. Love to see it. Thank you so much, Mike Lowry. So that's a good answer to that question, right? Should you buy the dip? And it all kind of comes down to, well, how much crypto do you already have? Because in some cases, this is a decent time to buy because of what could happen, right? And also because we just came off the highs and we are finding support. But ultimately, if you already have a bunch of crypto, this is not a great time to buy. Just going to say it plainly, right? We just came down. Ethereum was just down 18% lower than where we were at the top of the wick yesterday. So I think there's a better chance than not that we'll come back and test that. What you'll also notice here on the daily chart is that Ethereum is much closer, I believe. Let me confirm this before I say it, but it's much closer to its 200-day moving average. So we've got on the daily chart, Ethereum only 14% away from that 200-day moving average, whereas Bitcoin, from where it is now, is 17. Yeah, so you're getting in that regard, you could say that you're getting a discount here. That Ethereum is actually cheaper to buy relative to its 200-day moving average, and it would be a better buy. Again, you're going to have to do a lot more analysis before you firmly come to that conclusion. But that is a conclusion that a lot of folks come to without even looking at the charts. Raoul Pal, for instance, does think that he's a famous investor and capital venturist. He believes that Ethereum is a better buy for this next bull run because it has more room to run than Bitcoin. I don't necessarily agree or disagree with him, but that's just another reason why you might want to buy Ethereum over Bitcoin. And I brought that up because you can see here the proximity to that 200-day moving average for Ethereum is less than Bitcoin. So if there was a reversion to the 200-day moving average, which often, and we talked about at the beginning of the TA here, often there is, you can see that you would have lost less money if you had to sell, right? If you had to sell, or you would be down less money. You'd be down less if both coins went ahead and reverted back to the 200-day moving average. Whenever you're doing an out TA and you're thinking about buying, which is the question of the day, whenever you're thinking about buying the dip, you don't want to just look at the upside. You don't want to just say, oh, well, TA Tim has been saying that we could go to 28, and then taking your little indicator here and going up to where 28 is and saying, wow, I'm really zoomed out. And saying, okay, 28, yeah, I agree with him. I start to see all this resistance here. I think we could go to 28. And then looking at your, oh goodness, yeah, this is all kinds of crazy here. And saying, oh, I could make 28%. You have to also look to the downside. And this is definitely not the first time we've said this on the channel. You have to look to the downside too. And the downside, easily, a very strong line of support here would be the 200-day moving average. And that's going to put you down 16. So right now, that's a really good answer to the question, should I buy the dip? Right? The downside, reasonable downside, is very close. It's only, call it 3%, 2% off of what the upside is. So the upside is only 2% off of what the downside is. So is that a good investment? Is that a good time to enter into the trade? Those are two different questions, right? I would say it is not a good time to enter into a trade, right? If you're anticipating the upside, because the downside support is almost the same, right? So it's a 50-50 shot, and that's not great odds, right? You're just kind of a shot in the dark. It might be odds you'd take in a casino for fun, right? You want those odds to be a lot higher. So let's go ahead and move on to these altcoins. Hopefully there were some nuggets of wisdom in there that you were able to capture. Ultimately, if you're and why did I say that the two questions are different? Is it a good time to trade? Is it a good time to invest? It is a good time to invest if you do not have crypto at all. Why do I say that? Versus it is not a good time to trade. Well, people who are even entertaining the concept of trading know that this is just not a great time to try to buy Ethereum or Bitcoin to the upside, even though there has been a decent little dip. It's not enough of a dip, I would say, unless you're dealing with a ton of money or a ton of leverage, in which case you probably experienced enough to know that this is not the best time to buy to the upside. Okay, now that is different versus investing, right? So investing, if you do not have any crypto at all, right, and you're tuning into this channel, we are huge proponents of owning crypto. Why? Well, because it is the future of money, put simply, right? It's the future of money, it's the future of store of value and exchange, right? We don't know exactly how it's all going to shake up. There's been more than several. There's been many rounds of regulation, right? Especially in the United States, and we're going to get to a lot more today in the stories. There's been many rounds of regulation. There's also CBDCs that are going to come out and be launched, right, around the world, and there already are some, right? So there's big competition for other digital assets. And so we don't know exactly what's going to happen, right? But our investment, our bet in the long term is that this whole crypto thing is going to do really well. And everybody else that you're seeing there in the chat is feels and agrees with me to some degree. Let me take a sip here, and let's go ahead and take a look at EOS, HBAR, and the graph. All right, so let's start off with HBAR here. HBAR, as calculated by TradingView, you always want to make sure you're getting good data here. This is the market cap of HBAR. So see, that's a good catch. That's not really the chart that we want to be looking at. All right, let's put it on crypto. And let's see, we don't want the market cap. We just want it relative to US. So let's go ahead and just look at the relative to Tether, because we're not going to be spending too much time here on this. Why would I do Tether? Tether is okay because it's pegged, it's a stable coin that is pegged to the United States dollar. So this is going to give us enough. This goes back to October of 2022. Not a lot of historic data here, but honestly, I don't remember exactly how far HBAR goes in general. First thing I'm going to notice, since January of this year, HBAR has done well. HBAR has done pretty darn well. Really not spending too much time below its midline here for the Bollinger Band, which I believe is 20-day moving average. So that is pretty good. I have to say there's a lot of bullish pressure here, a lot of buying pressure for HBAR since the beginning of the year. As you can see here, it's taken a little bit of a dip since the top there at not at 9 cents at 0.098. It's taken about a 15% dip since then. Okay. Now, what I'll observe is that we're probably in a similar cycle to here. Now, I don't know how the events all line up and things like that, but if you look, the chart is very similar to here. You had a movement up, wick, movement back to the downside, back into the Bollinger Bands. You didn't touch the midline of the Bollinger Bands, but you did move sideways and eventually touch it before you accumulated to the upside. So a nice little upside accumulation phase, and then a big run up with a wick, blow off top, movement, and has not come back and touched that midline. So just based off the Bollinger Band analysis, multi-month for 2023, I'd say this guy has room to run to the downside first, to the tune of, call it 5 to maybe 8%, right? Before it's going to have another upside accumulation phase. But overall, guys, as an investment, HBAR is not bad for a lot of reasons. And most of the fundamental reasons I'm not going to cover because we are close to the market open here. But let me go here and look at graph really quickly. GRT is the ticker. That's right. We'll also go ahead and look at US dollar here. Let's see how much data we're working with here. I always like to look at that and just kind of generally zoom out. So this one goes back to 2021. Not bad. As you can see here, graph has been kind of similar to Cardano, where it had much higher prices in the past. It's currently at 1 cent, or 16 cents. So that's pretty low compared to $3. But that's the case that a lot of crypto is in these days, especially altcoins, as there's been a huge sell-off, and now we're waiting for the next bull run. And as you can see here, the graph's starting to show signs of that. Now, the graph, I believe, is in the category of AI tokens. Now, take that for what you will. A lot of folks think that the whole AI token, the whole AI stock world is a little bit gimmicky. It's maybe not ready. It's a little bit too early to invest. But as you can see here, 330% since its lows back here at 5 cents is graph. So graph has really made a big move. Where it currently is, though, since similar pricing of those lows, is 228%. So still up quite a bit. And as you can see here, in the same way that HBAR was up above its 20-day moving average here, as indicated by the Bollinger Bands, you also see that it is up above that. So it actually has probably more bullish pressure, which makes sense because of the AI fundamental. And that's why it didn't even come back down and touch that 20-day on the daily chart. So let's go ahead and also look at the green goodness gracious. So you can see just tons of bullish pressure here since early January, since 2023. It only ticked into red on the MACD very briefly. It looks like just a couple of days there, 3 days. and then it said, nah, I think we're going to buy this, and just kept moving. So this is a name where you probably want to buy all dips, right? If you're a swing trader, this would be a good coin to kind of swing trade here. Buy the dips, because this guy is just seeming like it's going to keep going up and up. And if you believe that there's going to be more AI hype cycles, then that's where you want to be. Somebody's saying GRT, no AI. That is Mr. B. Well, here's why I say that. Let me just show you guys. So if you type in FET on CoinMarketCap, and then you go to AI Big Data, you see the graph. So this is why I say that. It's not that it's claiming to be like AI or something like that, but it's getting kind of caught up in that cycle. It's getting associated with it. The graph is an indexing protocol for querying data. Let's see if AI comes up at all in a word search. Yeah. Blockchain data. Dun, dun. Yeah. So Mr. B, it looks like you're right. Mr. Bitcoin, it looks like you're right. Blockchain and AI, what's behind the hype? Although I will say, you are getting an article here. So it looks like, at the very least, and I got to be honest with you guys, I don't really know to what extent the graph is AI or isn't AI. But the important thing to remember in investing is it doesn't have to be what you think it is. It has to be believed, it has to be perceived by the rest of the investing community that it is what it is believed to be said it is. I know that can be confusing, guys, but if you take a look here, these are the ones that are definitely AI associated: SingularityNet and FET, which FET has lost quite a bit of ground market cap wise to Oasis Network and Render Token. But the graph here still leading the way with a much larger market cap than the rest of them. But Mr. B, I really, really appreciate, I bought a large snacks anyhow. I really, really appreciate you pointing that out. And then Crimson Caravan put it very nicely. He said it's AI adjacent. That is excellent. And then Crypto Trade said, you can put HBAR on AI too with the way it handles transactions through the hash graph. It could be used for AI as well. So look, AI is kind of just this big fun buzzword right now. There are some things that are actually AIs. And then there are some things that have algorithms that are complex that people who don't really understand AI or algorithms can easily call AI. It's kind of a wacky world out there in the world of technology reporting. And so people are getting away with calling things other things. But here, it's hard to disagree with this. When you're looking at the CoinMarketCap view page for top AI and big data tokens, right? It's on the freaking list. So it's kind of hard to argue with that. Now, maybe it's on the big data side. Why wouldn't they just break this into two different pages? Is maybe a question you could ask. But at the end of the day, folks who are wanting to get into these names are also looking to get into these names. Hey, we heard you liked fedoras. Well, here, try a baseball cap, right? It's a very similar product in its positioning to the rest of the market. And Mr. B, at the end of the day, even though he helped me and pointed out, hey, Graph is not AI, he also bought some of it, right? Graph is the Web3 Google. T-Shroom is the next AI. Crypto Glock said, I guess Kit was AI from the 80s. And Mr. B said, T-Shroom is good and getting better. So excellent stuff. Excellent stuff. I appreciate the encouragement there, guys. Well, we are well overdue for our market opens. Let's go ahead and zip over there and check it on out. Looks like energy is having a stark sell-off this morning with natural gas down 4% across the board on your futures contracts and on the ETF for natural gas that we like to watch, and that is UNG. Let's go ahead and take a look at the price charts for natural gas here. And yes, they are pushing lower. Wow. So you're seeing an actual sell-off to new lows here for natural gas. Now, it's a daily chart here, so you didn't get a candle body close on this by any means yet. We're still in the early minutes here of the New York session, but for all intensive purposes, this is not a good look for those who are long on natural gas, and your boy is one of them, sadly. Let's keep looking here. Oil, goodness gracious, selling off 3%. Let's see, our indexes are all selling off here in the early morning, and the NASDAQ doing the most selling. So if I had to guess, I would say our mega cap tech stocks are more than likely selling off. Now, I'm starting to see a little bit of a difference here, and that is that you're seeing crazy green on the screen here for crypto in a time where your indexes are selling off. Now, what does that tell me? Does that inform the question of the day, which is, should you buy the dip? I'm not sure, but you're definitely seeing a lot of bullishness here in crypto that you're not seeing in the equities market. Now, this is confusing here, guys. Biddy is up. This is beyond my comprehension here. Biddy is up almost 3%, which is a reverse ETF of Bitcoin at the same time that Bitcoin is up. So very strange price movement there. Very, very strange indeed. It's almost like the markets are closed today or something, but I know they're not. Metal selling off, silver down 1.9%, and gold down 6%. Somebody, 0.6%, goodness. Somebody tell me in the comments, do you know why Biddy is up on the same time that Bitcoin is up? It may have to do with the fact that I guess it probably has it. Oh, it has. I figured it out, guys. The reason is because Biddy does not actually track Bitcoin spot price. Biddy tracks the futures price. And as you can see here, the futures contracts are selling off. So there is some depegging here of the futures contracts relative to the spot, the underlying price of Bitcoin. And it's very, very strange. Let's see if anybody in the chat has any insights on this. Tyler Main, some stuff. A lot of people still talking about AI. Joe Watkins says, you missed the quote of the day, by the way. Yes, I did. Or did I? Is it still to come? Biddy is up because BTC futures are down. Thank you, Caleb. I appreciate that. Yes, I discovered that, but I don't why. Let's see. Have to remember when BTC daily close occurs versus the futures market daily close is. Yeah. Okay. So Caleb, I really appreciate it. You know, it takes a Caleb Franzen to help. It takes a village to help us really understand exactly what we're looking at and help us answer the question of should you buy the dip. Caleb coming in strong there with a great answer. There is a difference between the market timing for both of these assets, for the futures contracts of Bitcoin and for the spot price of Bitcoin. Now that we have solved that mystery, let's keep moving. A good question might be, is this a great time to short Biddy, right? Because there's some depegging here that's going on that more than likely will be ironed out, right? And that would mean that the futures contracts would come up in price, probably exactly to the tune of mid fives there. So interesting move, but you're seeing Matic lead the market for crypto. Of course, I'd be remiss if I didn't point out our leaders there. We covered the metals, and here we go. My prediction is correct, which is that their mega cap tech stocks are in the red across the board, except Tesla, staying green. Let's take a look at that. Yeah, so Tesla making a very good claim here of a dip buying possibility as it's coming up and doing the opposite of what Bitcoin is, which is trying to make a run for the 200-day moving average. It's been below the 200-day moving average here on the daily chart for 100 bars or 150 days. Okay, so it's trying to break that. It's trying to convince investors, hey, there's still a lot of value here. Come invest for the long term. We're getting back up above our 200-day moving average, which means we're kind of on sale. Go ahead and buy us while it's hot, and you can enjoy that ride back all the way up to 410 in style with a nice little discount price of Tesla. Are you going to take it? I don't know. Should you take it? I don't know. Maybe you should, maybe you shouldn't. I mean, right now, you could say there's a pretty strong, it kind of looks like not H-bar, it kind of looks like graph, where it's so far away from the 20-day moving average, and it hasn't really stopped. It hasn't really come back and showed a strong movement to the downside to test that. Now, I will point out that this is, again, Tesla, guys, not crypto here, but I will point out that you are getting a what could be a bear cross here. These lines are converging, and you're also seeing decelerating green histograms there. So this means that the buyers are the volume is slowly leaving the market, and you are getting today or yesterday, you got a pretty big red candlestick. So maybe there's some selling pressure finally coming back. I believe there were some recall headlines for Tesla yesterday. So that may be why we're seeing that movement to the downside for Tesla. Well, bonds look like they're selling off, yields having to come up, but ever so slightly. Pretty much, you could say there's not really much to conclude there from bonds because of how small those numbers are there. But let's take a look at the Dixie. The Dixie continues to climb, guys, sticking to the upper band of the Bollinger Band there like a caterpillar, making a run for the 200-day moving average. Very interesting. This, for those of you who don't know, I've done a lot of noob talk today. Most of the content for this today has been kind of for noobs, so let's go ahead and drill in here to the Dixie. What is the Dixie? The Dixie is a dollar strength index, right? So it's kind of saying how strong is the dollar compared to a basket of other, I believe it's other currencies. And commodity, I'm just going to say I don't know. I don't remember exactly what the Dixie is being measured against. It could be everything. It could be the entire market as a whole. But as you can see here, the Dixie is growing stronger. But as Army Piper pointed out earlier this week, it's growing stronger at the same time that Bitcoin is growing stronger. So, and this is something that we only really see in bull markets for Bitcoin. So encouraging data there. Well, we'll go ahead and wrap out by taking a look here at cannabis is selling off down 1.5%. And then also mid-cap tech stocks are down, except for DraftKings, which had an outstanding earnings result this morning, and it's getting bought. And its price is reflecting those earnings. So really, really good earnings for DraftKings is pushing it higher. Right. And then also your oil producers are selling off pretty sharply. Not a surprise considering your oil price here is getting sold down even more, down 3%. So momentum shifting to the downside there for oil. Well, we've got a lot of stories to cover here, guys, this morning. So let's go ahead and jump over to our crypto stories, of which there are many. And looks like we're probably not going to cut this stream short because we have not even started on our stories yet. But let me go ahead and look into the chat. Caleb Franzen throwing up a big heart. Felzik throwing up a big like for Caleb. So you got to love that. What else should you like, guys? If this is a day of liking, you should definitely like this video. And if you haven't already, consider subscribing. I am just one half of the Investing Bros. And Tim is away. As I said before, he has got a very important business meeting, but he will be back on Monday. Crimso Caravan Company said, you think we're going to break 24,200? Do I think we're going to break it? I'm assuming you mean to the downside. Let's take a look at that really quickly. And we've got our story there, but let's go ahead and take a look really quickly at Bitcoin. Do I think it's going to break 24,500? 24,200. So 24,200 is, okay, so you're saying to the upside. Do I think we're going to break 24,200 to the upside today? Let me answer that question after we look into the media and look into kind of what the fundamentals are, because you can only really surmise so much from the charts with the indicators that I'm looking at. You can definitely get a lot more information with other indicator packs that Tim likes to get into, but just so far with the traditional indicators, I would say that it's more likely than not that we would see more upside this morning. And why would I conclude that? Just based off of very simple analysis that the wick on the day is higher than the wick to the lower. And also we are above the midline of the candle body there. So that would be my conclusion on that, is that it's more likely that we'll see upside today on Bitcoin than not. And you can see that also with just the immense money that is flowing into crypto rather than equities. And also the money that's flowing out of energy, right? And potentially either onto the sidelines or into crypto. I doubt there's money coming straight out of energy into crypto, but you could kind of read it that way. Japan announces launch of new CBDC pilot this April. So this is going to be happening in April, in the spring of 2023. A CBDC is a digital version of a state's fiat currency, like the US dollar or the yen, backed by a central bank. CBDCs are digital assets, but are different from the likes of Bitcoin and Ethereum or Dogecoin, as they are run on a private blockchain controlled by the government. Does that sound fun? Does that sound like something that you want to own a lot of? More than likely, the crypto community is one of the only communities outside of maybe finance who knows that CBDCs are bad news. Let's keep reading here, though. The trial will also explore the technical challenges of connecting the experimental CBDC network with the existing financial networks and determined the appropriate data models and architecture for facilitating offline payments. CBDCs, folks, they're coming to Japan. Let's see. And then also, it's not just Japan, though. It's also the UK, right? So Britain, this was from February 7th. Britcoin, Constellation, goodness. All these big words in the early mornings, hard for me to read. Britain's Constellation lays groundwork for UK's digital pound. So the UK also looking into CBDCs and digital fiat currency there. And it's not just them. It's also the New York Fed, right? So the Federal Reserve of the New York, of Bank of New York, goodness gracious, has also, and this one is from, see if there's a date on this. Yeah, November 4th, 2022. So late 2022. They announced the Project Cedar. If you haven't looked into that, you absolutely should. This article is probably not too bad. It details it in pretty good detail. But the experiment studies applications of blockchain technology in facilitating efficient cross-border wholesale digital currency payments. I will spend a minute or two here. Okay, so CBDCs are bad news. Why do I say that? CBDCs are basically the extension of everything bad that has happened with central banks into the future, right? They've got this shiny new technology of blockchain, and they think that they're going to be able to be as successful as Bitcoin and Ethereum in rolling it out. Well, when have you ever known the government to do something better than the private sector? Collecting taxes. That is one thing that they're better at. Holding elections, they are probably better at doing that and making a big stink of it all, of course. But operating a monetary system is not something that they've ever had the challenge of, other than gold, right? There's never been a contender that's ever come close to being a better means of exchange than fiat currency. Fiat currency, after all, has got us to where we are today in technology, okay? But after 1971, when the United States was broken off of the gold standard for good under President Nixon, you know, things change. 1971, you can look at so many graphs. There's even a website that said what the F happened in 1971. See if I can find that. What happened 1971. Yes. And this is why I remember that there was a profanity, because it is WTF happened in 1971. So this entire website, you guys can go and check this out, dedicated to looking at all of the different things that happened after 1971. Back to CBDCs. CBDCs are basically the government of Japan, of the UK, and of the United States. As of today, Japan kind of announcing that they're going to come out with something in April, kind of dipping their toes into experimenting with blockchain, getting their best technologists maybe in the army, maybe on the private side that they're contracting, saying, hey, like XLM, Stellar Lumens, hey, why don't you guys go ahead and build us a CBDC? We're going to do some experimentation on our own. And by the way, we're all really good guys, and we're just looking out for the best thing that we could possibly create for the American people. Yeah, go ahead. Let's start. And that's what all these Western governments. I'm not saying Japan is a Western government. But all these Western countries, let's say the UK and America, are beginning to experiment with CBDCs. Now, what is the country that is the most developed with CBDCs? That would be China. China has had eCNY for a while now, and they have used it in the most authoritarian and oppressive ways possible, right? They have tied it to credit scores. They have used CBDCs to say, hey, you owe money to a bank and you haven't been paying it. We're going to make it to where you cannot go buy Starbucks. You cannot go buy a new phone. You cannot go buy luxury items until you pay off that debt. Now, in some cases, some people need that kind of authority, but that's not what we want. That's not what we want as a whole for our monetary system, right? We don't want that infantilism, I believe is what it's called, baked into monetary policy and baked into, and if we did, we certainly wouldn't want the government to be the one that rolled that out. So that is why CBDCs are a pretty big deal. CBDCs are capable of being very oppressive mechanisms. You don't agree with the government's views, you now have 50% less purchasing power. So if you had 1,000 dollars, whatever, CBDC dollars, right, that the government has converted your paper dollars into, you have 1,000 of those. Those are now worth half. So now you actually only have $500. And did the same thing happen to everybody else? No, because that's what CBDCs unlocks the potential of. CBDCs are basically, it's like money on steroids in terms of what the circulator can do, what the monetary authority, the centralized monetary authority can do. Whereas with the system we have now, at least a dollar cannot be shrunk in and of itself. And that capability would absolutely be unlocked under CBDCs. And now we're seeing Japan getting into that too. Not a surprise. Not a surprise at all. Well, this headline kind of took the world by storm yesterday, the crypto world at least. It says the SEC sues Terraform Labs and founder Do Kwon for securities fraud. Let's read further. The complaint filed in the U.S. District Court for the Southern District of New York charges the defendants with violating the registration and anti-fraud provisions of the Securities Act and the Exchange Act. So getting the backhand from both acts there. This is the SEC speaking. We allege that Terraform and Do Kwon failed to provide the public with full, fair, and truthful disclosures as required for a host of a crypto asset securities, most notably for Luna and Terra USD, said SEC Chair Gary Gensler. We also allege that they committed fraud by repeating false and misleading statements to build trust before causing the devastating losses for investors. It looks like that's the tweet from the Securities and Exchange Commission. Today we are charging Singapore-based Terraform Labs, PTE Limited, and Do Kwon with orchestrating a multi-billion-dollar crypto asset securities fraud involving an algorithmic stablecoin and other crypto asset securities. So here's kind of my, well, let's go ahead and read this. In June 2022, the SEC announced opening an investigation into the collapse of Terra Luna and whether its stablecoin violated federal securities regulations. Earlier that year, Terra ecosystem was rocked by a $60 billion implosion of the Terra stablecoin and the collapse of its Luna token. So my conclusion on this, guys, is that is this the SEC kind of grasping, not really grasping the straws, but biding its time, right? You can make an argument that the SEC should have levied this lawsuit months and months ago, back when this initially happened, back when 60 billion implosion happened, and they could have issued a lawsuit based on just mismanagement. Now it's a Hong Kong base. I believe that Terraform Labs was always Hong Kong based. I could be wrong on that. It may have been headquartered in the United States. But in any case, the SEC is long overdue for that lawsuit, in my opinion. Whether or not you think it should or shouldn't be levied against Terraform, there's been an argument for them doing that for a long time, the SEC. So why are they doing it now? Well, it's because they're losing. I believe they're losing on the public battlefield of the public to the extent that they're trying to battle investors of crypto. They're losing, right? They've come out strong against Brian Armstrong was the first to kind of give a bat signal, if you will. Hey, the SEC's coming. The SEC's coming. Kind of the Paul Revere there early for stablecoin issues. And then sure enough, the SEC levies a big waving of the finger at Paxos and says, hey, you need to stop minting BUSD. And they comply. And CZ's not too upset about it. Right. And so that's kind of okay, well, they won that battle, right? But then what happened? People bought crypto, right? They bought Bitcoin and Ethereum at a high margin. And so the SEC is kind of losing that public battle, right? They're firing off some big weapons that they've been planning and nothing happened, right? The prices of crypto just went up, right? And so this is just what I think that is. I think that Do Kwon probably was running something close to a securities fraud Ponzi scheme. There's a possibility he wasn't, but I highly doubt it, right? And so the SEC has every right to do this, but they should have already done it, okay? And so it's just a timing thing here. I want to go through this one quickly, but it is important. Unlike Merge, Ethereum Shanghai upgrade could bring Ether price volatility. This time could be different. While Merge was pure technological shift with no direct economic impact, the Shanghai upgrade will change the supply and demand of Ethereum, both in the short and long term, therefore capable of having a significant impact on the Ethereum price. Right, so that's important. The major catalyst for crypto market is Ethereum's Shanghai upgrade, scheduled in March. That's when it's going to happen. And it will open up withdrawals to more than 16 million Ether staked in the blockchain. So the long and short of it there is this could potentially have downside. They're calling it volatility, but this could have downside for Ethereum. Now, is all that staked Ether likely to just leave the Ethereum blockchain? You know, a good amount of people are just not going to unstake, right? And then a good amount of people are going to take their Ethereum and maybe put it into other crypto projects, or they're just going to hold Ethereum, right? Unstake and just hold Ethereum. Overall, it's hard to say what's going to happen. Nobody really knows. It's going to be millions of individuals making, or hundreds of thousands of individuals making individual self-interested economic choices, right? So we shall see. All right, guys, we got to blow through these next headlines because we are over time here, guys. The SEC is more in the headline. Burstein says SEC tightening of crypto regulations is not an existential threat, just kind of continuing to add to the theme that the SEC is losing the battle of trying to spread FUD in crypto. I'm going to skip that one. Starbucks Polygon NFTs are already selling for thousands. Early Starbucks Odyssey users are already flipping the free NFT stamps for nearly $2,000. Goodness gracious. Hopefully some people got in on that one. The Fear and Greed Index, very, very bullish here as greed has ticked into 61. Yesterday was already up at 62. And then we've got one more here. This is probably why you're seeing a sell-off in equities this morning. Why the S&P here, the Dow Jones and NASDAQ are red is because of this comment here from the St. Louis Fed Bullard speech from yesterday. He said, can't rule out a 50 basis point hike in the March meeting. Now, what is that doing to the CME future predicting tool? Well, it's bumping up to 21, right? And let's go ahead and refresh and get a nice little fresh bit of data here. 21% now that we will get a higher hike than what is being predicted over here, which is 80%, okay? So not great at all. But overall, it's just a movement in a bearish direction, but is by no means all that bearish. So again, 25 basis point hike, 78% likelihood, and then that has changed since yesterday's Bullard speech, which I just referenced, that he said you can't rule out 50. Well, the market was ruling out 50, and now it's doing that to a lesser degree. Guys, I have been T. Shroom in for the Investing Bros. Had a lot of fun bringing you guys some chart analysis. You don't get to see me do TA too much. I will be getting more TA done and hopefully showing you guys some of that TA in the future here. I'm more the news guy. I'm more the news analysis and kind of high angle. And what was the high angle question we were asking today, guys? That was, should you buy the dip? I feel like I answered that question pretty sufficiently, but here, let me summarize my conclusion on that. Should you buy the dip? Well, there's two types of people. There's people who don't have any crypto at all or very, very little crypto, right? And there's people like me who have just, a large percentage of my net worth is in crypto, right? For me, this dip that we've seen is not something that I'm really interested in buying quite yet. I want to see if Bitcoin can come back down about 16%, revert back to that 200-day moving average, test it before it has a nice launch up 30, 40%, right? That's kind of the dip that I'm wanting to buy. Now, it's a different case for people who are not invested in crypto at all. You probably, if you believe in everything that we've talked about today, that CBDCs are bad, one of the best ways to fight against CBDCs is to buy the private version of that, which is just private crypto, aka Bitcoin and Ethereum, right? If you believe that narrative, you should absolutely buy this dip because you should just buy crypto in general, right? Not financial advice, not life advice, but is something I believe in, is owning crypto and owning it and holding it for the long term. Guys, thank you so much for watching. On the way out, I want you to go ahead and like and subscribe to this video. It's been a huge pleasure. It's been a real honor to be able to bring you guys this information. Mr. B saying overtime, seeing Taylor Warren say get better soon. I think that the head colds are going around. Tim has passed his along to me. So she's saying get better for herself. Very good there. Also seeing some encouragement from Matt C. Everybody is feeling a little bit sick, but guys, that's what the weekend's for. go be sick this weekend. have a good recovery if you are sick. I'm not sick though, so I'm gonna go play football with my buddies. I'm gonna go play some flag frisbee. See what's gonna happen there. Steve Shrum saying weekend is here. Push, go, work hard. Exactly. And if you don't know, Steve Shrum is my father. It's always good to have support from your father on the things that you're working so hard on, guys. Go ahead and smash the like button. Consider subscribing. But thank you so much for watching, and I will see you in the next video. Peace.